last class we studied about mutual funds. Then we know different types of mutual funds are there. By maturity period we can classify into open-ended and closed-ended mutual funds. Okay. Then by maturity period we can classify into open-ended and closed-ended mutual funds. Okay. Then on the basis of investment we can classify into growth or equity fund, then income or debt fund, balanced fund, then gilt fund, then index fund, money market fund. Okay, like that we can classify into different type of mutual funds. Okay, now we can go through open-ended schemes. A mutual fund scheme can be classified into open-ended based on maturity period. Okay, that one is based on maturity period. It's open-ended fund and closed-ended fund. Okay, in the case of open-ended fund, mutual fund is one that is available for subscription and repurchase on a continuous basis. These funds do not have a fixed maturity period like 5 years, 6 years, like that. Maturity period will not be there. That one is the open-ended scheme. Okay, in the case of close-ended schemes, stipulated maturity period will be there like for 5 to 7 years. Fund is open for subscription only during a specified period of time. Okay, like that some limitation will be there. That one is the closed-ended scheme. Okay, then next one is schemes according to investment objectives. Okay, a scheme can be classified in as growth fund, income fund, then next one is balanced fund, then next one is balanced fund, after that money market funds, gilt fund, index fund. Okay, then growth equity oriented scheme. The aim of growth fund is to provide capital appreciation over the medium to long term. Such funds have comparatively high risk. Okay, then these funds provide capital appreciation medium to long term, but what is the problem? High risk is the problem. These schemes provide different options to the investors like dividend option, capital appreciation, etc. And the investors may choose an option depending on their performance. Okay, the investors must indicate the option in the application form. Okay, the mutual funds also allow the investors to change the option at a later date. Then growth schemes are good for investors having a long-term outlook, seeking appreciation over a period of time. Then growth fund provide to capital appreciation over the medium to long term. Then growth fund means that one is for medium to long term, and it's giving appreciation, like appreciation means profit, like different options like dividend option, capital appreciation, like that different option is there. Next one is income fund or debt oriented scheme. Okay, income scheme, in that one, okay, growth equity oriented scheme, that one we studied. Next one is income or debt oriented scheme. Then income debt oriented scheme, the aim of income fund is to provide regular and steady income to investors. Provide regular and steady income to investors. Such scheme generally invest in fixed income securities such as bonds, corporate debentures, government securities, and money market instruments. Such funds are less risky compared to equity schemes. The aim of income fund is to provide regular and steady income to investors. That one is the main aim of the income funds. Okay, such scheme generally invest in fixed income securities such as bonds, corporate debentures, government securities, and money market instruments. These funds are less risky compared to equity schemes. Okay, these funds are not affected by the fluctuations in the equity market. Then we know, however, long-term investors may not bother about these fluctuations. Okay, we know because this one are for long-term. That reason, long-term investors are not bothered about fluctuations. Okay, then next one is balanced fund. In that one, the aim of balanced fund is to provide both growth and regular income. As such, schemes invest both in equities and fixed income securities in the proportion indicated in their offer documents. Then balanced fund is to provide both growth and regular income. It is a balanced fund. These are appropriate for investors for moderate growth, means high profit will be less. Okay, they generally invest 40 to 60% equity in debt instruments. These funds are also affected because fluctuations in share price in the stock markets. Okay, these funds are affected by share price, stock market. Then these are appropriate for investors looking for moderate growth. Okay, then this is the balanced fund. A regular income will get and growth also will get. Okay, next one is money market. These funds are also income funds and their aim is to provide easy liquidity, preservation of capital and moderate income. Then money market, their main aim is to provide easy liquidity, preservation of capital and moderate income. These schemes invest exclusively in safer short-term instruments such as treasury bills, commercial papers and government securities, etc. Then these schemes, especially we know in these schemes main investment will be in treasury bills, commercial paper and government securities. These funds are appropriate for corporate and individual investors as a means to park their funds for shorter period. Okay, then returns on these schemes fluctuate compared to other funds. These fund especially we know these fund have fluctuations. Okay, then these funds are also income funds. Their aim is to provide easy liquidity, preservation and capital. Easy liquidity means we can transform into money easily. Okay, then we know treasury bills, like this purpose we can transfer easily. That one is the money market. Next one is gilt fund. These funds invest exclusively in government securities. Then government securities have no default risk. Okay, gilt fund means funds invest in exclusively in government security. That one is the gilt funds. Okay, next one is index fund. This index funds means this scheme provides securities in the same weightage comprising of an index. Okay, such as BSE. We know index fund replicate the portfolio of a particular index such as BSE, Bombay Stock Exchange, NSE, like that. Okay, these schemes invest the securities in the same weightage comprising of an individual of net asset value. Such scheme will rise or fall accordance with the rise or fall in the index. Okay, then necessary disclosure in this regard are made in the offer document of the mutual fund schemes. In these schemes necessary disclosure will enclose. Okay, these are also exchange traded index fund launched by the mutual funds which are traded on the stock exchange. Then these are the main funds. Which are the main fund? Closed-ended scheme is there, open-ended scheme. That these schemes are based on maturity period. Then investment, based on investment, growth oriented scheme, income oriented scheme, balanced fund, then money market, gilt fund, index fund. Okay. Then next one is, what are the advantages of mutual funds? Means professional management, that one is the main advantages of this mutual fund. Then minimization of risk, then return potential, we can expect some return, low cost liquidity, then choice of schemes, tax benefit. These are the advantages of mutual funds. Then various mutual funds in India, we know State Bank of India is there, ICICI Prudential Mutual Fund is there, Tata Mutual Fund is there, then Birla Sun Life Mutual Fund is there, Reliance Mutual Fund is there, Kotak Mahindra Mutual Fund, etc. Then there are some questions. What are sector specific fund schemes? We know fund schemes are there. These fund schemes which invest in security of only those sectors or those industries as pharmaceuticals, then software, fast moving consumer goods, petroleum stocks. These are the fund schemes. Okay. The return in these funds are dependent on the performance of the respective industries. Okay, then fund schemes means like these, we are investing securities only for those sectors or only for those industries. That one is the fund scheme. Then another is tax saving scheme is there. Government offers tax incentives for investment in specified areas like equity linked saving schemes, like that. Tax benefits are there, then tax schemes are there. Then load and no load fund. What is load fund? A load fund is one that charges a percentage of net asset value for entry or exit. Load fund means it is the charge is on that charges a percentage of a net asset value for entry or exit. For entry and exit, some charge will be there. That one is the load fund. Okay. Then each time one buys or sell unit in the fund, a charge will be payable. This charge is used by the mutual fund marketing and distribution expense. Okay. When you are buying and selling securities, some charge will be there. Suppose net asset value per unit is rupees 10, then entry fee is 1%. Like you need to pay 10 rupees and 10 paise, like that you need to pay. Then that one is the load fund. Okay. No load fund is one that does not charge for entry and exit. There is no charge. That one is no load fund. Okay. Then now we can study about how to invest in a scheme of a mutual fund. Mutual funds normally come out with an advertisement in newspapers with publishing date and schemes. Okay. Investors can contact agents or distributors of mutual funds who are spread all over the country for necessary information and application forms. Forms can be deposited with mutual funds through the agents and distributors who provide services. Okay. Then nowadays the post office, bank also distribute the units of mutual funds. Okay. Can contact agent or distributors and they can fill the application form and they can join in that one. The only role of bank and post office is to help the distribution. Okay. Then can non-resident Indians, means NRIs, invest in mutual funds? Yes, non-resident Indian can also invest in mutual fund. But they need to give respective information. Okay. Means like details like Aadhaar, like that. They need to provide passport details, like that. They need to provide proper information, means they need to give documents. Okay. An investor should take into account his risk taking capacity, age, financial depends on that one they can invest. Okay, the scheme invests in different types of securities as disclosed in the offer documents and offer different returns and risk. Okay, investors may also consult financial expert before taking a decision. They can consult they can do consultation with agents and they can invest. Okay, then how to fill the application form of a mutual fund scheme? An investor must mention clearly name, address, number of units, all these things they need to mention, and he need to give check or draft issued by mutual fund later date for the purpose of dividend or repurchase. Okay, he must give his bank account number to avoid this fraudulent encashment of any check and these things. Any changes in address and everything they need to inform. This is the procedure for joining in a mutual fund scheme. What should an investor look into an offer document? Then this document contains very useful information. Means the application form subscription to a scheme is an integral part of the offer document. SEBI has prescribed minimum disclosure of offer document. Means in that one they need to give the details. An investor before investing in a scheme should carefully read and offer the document. These are the main thing in mutual fund schemes.